Welcome back to our channel. We hope you'll find valuable content here. If you enjoy our channel, please remember to like, subscribe, and stay tuned for more. Let's dive in. Money, in its most basic form, is a medium of exchange. It's a tool that allows us to trade value. In ancient times, bartering was the norm. If you had a cow and needed wheat, you'd find someone with wheat but in need of a cow. This direct exchange of goods was simple but had its limitations. Enter money, a tool that represents value and facilitates trade without the need for a direct item-for-item swap. Understanding the essence of money. Money is a fascinating and complex entity that has evolved over centuries, shaping and being shaped by human civilization. At its core, money is a medium of exchange, a tool that facilitates the trade of goods and services. It represents value, making transactions smoother and more efficient compared to the barter system, where goods were exchanged directly. In ancient times, people traded what they had for what they needed, a system that required a double coincidence of wants. This means that for a transaction to occur, the two parties involved had to have exactly what the other wanted. As you can imagine, this could get quite complicated. Money emerged as a solution to this problem, a middleman that could represent the value of all goods and services, making trade simpler and more flexible. But money is more than just a piece of paper or a digital number in your bank account. It's a representation of value, and its real worth comes from what it can be exchanged for. The essence of making money, therefore, is not about accumulating stacks of cash. It's about understanding how to create and exchange value. For entrepreneurs and business owners, this understanding is crucial. Money flows from the creation and exchange of value. When you start a business, you're essentially creating a system for producing value, whether it's in the form of a product or a service. Your earnings are a direct reflection of how much value you can create and how well you can convince others of this value. Understanding where money comes from is about understanding how value is created and exchanged in the economy. It's about finding your place in this vast network of transactions and figuring out how you can contribute value in a way that benefits both you and your customers. In the following chapters, we will delve deeper into the 5 primary sources of money, exploring how each of them works and how you can tap into them to create wealth. But always remember, at the heart of it all is value. Money is just the tool we use to measure and exchange it. The 5 primary sources of money. In our journey to understand the essence of money, we've established that money is a tool for exchanging value. But where does this money come from? How do individuals and businesses tap into the streams of income that flow through the global economy? Let's delve deeper into the 5 primary sources of money, which are the main channels through which people earn and accumulate wealth. Employment, trading time for money. Engaging in employment is one of the most prevalent and straightforward means of acquiring money. This involves individuals offering their unique skills, expertise, and time to an employer, who in return provides a salary or wage. This transaction is a direct exchange of value, where the employee contributes their services and the employer compensates them accordingly. Consider the role of a teacher, who dedicates their time to impart knowledge and skills to students. They play a crucial role in shaping the future of the younger generation, and their compensation reflects the value they add to society. Similarly, a doctor invests years in education and training to provide healthcare services, treating patients and saving lives. Their compensation is a direct reflection of the critical value they provide. A software engineer, on the other hand, utilizes their technical skills to develop applications and software solutions. In today's digital age, their role is pivotal in driving innovation and efficiency across various sectors. Their compensation is a testament to the high demand and value of their skills. In each of these examples, the individuals are trading their time and expertise for money. They are actively involved in the process, and their income is directly tied to the amount of time and effort they invest. This is the essence of employment as a source of money. However, it's important to note that while employment provides a steady and reliable source of income, it also has its limitations. The potential for income is often capped by industry standards, and the reliance on a single source of income can pose risks. Diversification and strategic financial planning become crucial in ensuring financial stability and growth. As we continue to explore the other sources of money, we will delve into opportunities that allow for income generation beyond the traditional employment model, opening doors to greater financial empowerment and freedom. Business and entrepreneurship: creating and selling value. The world of business and entrepreneurship is vast and varied, offering endless opportunities for individuals to create and sell value. While employment involves trading time for money, entrepreneurship is about identifying needs, creating solutions, and selling them to those who benefit from them. It's a journey of innovation, risk, and potential reward. Identifying needs and gaps in the market. Every successful business starts with an idea. But not just any idea, it's an idea that addresses a specific need or gap in the market. Entrepreneurs are often keen observers, noticing problems that others might overlook and envisioning solutions that can fill those gaps. For instance, think about the inception of ride-sharing apps. Before their existence, people relied on traditional taxis or public transportation. Entrepreneurs saw a need for a more efficient, cost-effective, and user-friendly transportation solution, leading to the birth of companies like Uber and Lyft. Creating solutions and adding value. Once an entrepreneur identifies a need, the next step is to create a solution. This involves a combination of innovation, research, and development. The goal is to offer something that not only addresses the identified need but also adds value to the user. Consider the rise of online streaming platforms. With the decline of DVD sales and the inconvenience of cable TV schedules, there was a demand for a more flexible entertainment solution. Platforms like Netflix and Hulu stepped in, offering vast libraries of content that users could access anytime, anywhere. Selling the value proposition. Creating a valuable solution is only half the battle. Entrepreneurs must then convince potential customers of its worth. This involves marketing, branding, and sales strategies to communicate the value proposition effectively. Take the example of organic food stores. The products might be similar to what's available in regular grocery stores, but entrepreneurs in the organic market effectively communicate the benefits of organic produce, be it health benefits, environmental considerations, or ethical reasons. The risks and rewards of entrepreneurship. Entrepreneurship is not without its challenges. It involves risks, including financial investments, market uncertainties, and competition. However, with risk comes potential reward. Entrepreneurs who successfully address market needs can reap significant financial benefits and the satisfaction of creating a lasting impact. Business and entrepreneurship are dynamic realms where individuals can create and sell value. By identifying needs, innovating solutions, and effectively communicating their value proposition, entrepreneurs can carve a niche for themselves in the market, leading to financial success and societal impact. Investment: letting money work for you. The concept of investment revolves around the idea of using your existing resources, primarily money, to generate more money over time. Instead of actively working for every penny, investments allow your money to grow passively, capitalizing on various financial instruments and market dynamics. Let's delve deeper into the world of investment and understand how it can be a significant source of money. The power of compound interest. Albert Einstein once said, "Compound interest is the eighth wonder of the world. He who understands it, earns it, he who doesn't, pays it." Compound interest is the interest calculated on the initial principal, which also includes all the accumulated interest from previous periods on a deposit or loan. In simpler terms, it's the interest on interest. For example, if you invest $1,000 at an annual interest rate of 5%, after the first year, you'll earn $50 in interest. If you leave the money untouched, the next year, you'll earn interest not just on the initial $1,000 but also on the $50 interest from the previous year. Over time, this compounding effect can lead to exponential growth of your investment. Diversification: don't put all your eggs in one basket. One of the golden rules of investing is diversification. It's the strategy of spreading investments across various assets to reduce risk. The idea is that if one investment performs poorly, others might perform well, balancing out potential losses. Imagine you invest all your money in a single company's stock. If that company faces a crisis, your entire investment could plummet. But if you spread your money across stocks from different sectors, real estate, bonds, and other assets, the risk is distributed. Some might underperform, but others could see significant gains. Types of investments. Stocks: buying shares of a company, making you a partial owner. Stocks have the potential for high returns but come with higher risks. Bonds: lending money to a company or government in exchange for periodic interest payments plus the return of the bond's face value when it matures. Real estate: investing in property, whether residential, commercial, or land. Real estate can provide rental income and potential appreciation in property value. Mutual funds: a pool of funds collected from many investors to invest in stocks, bonds, or other assets. Cryptocurrencies: digital or virtual currencies that use cryptography for security. They are decentralized and based on blockchain technology. The importance of financial literacy. Investing requires knowledge and understanding. Financial literacy, the ability to understand and use various financial skills, is crucial. It includes budgeting, understanding interest rates, and knowing the basics of loans and credit. With financial literacy, investors can make informed decisions, assess risks, and choose the right investment strategies. Investment is a powerful tool for wealth creation. With the right knowledge, strategy, and patience, individuals can see their money grow over time, providing financial security and freedom. Royalties and patents earning from intellectual property. Intellectual property, IP, is a category of property that includes intangible creations of the human intellect. It encompasses a wide range of creations, from literary works and music to inventions and brand identifiers. One of the primary ways individuals and entities monetize their intellectual property is through royalties and patents. Let's dive into this fascinating world and understand how it serves as a source of money. Understanding intellectual property. Intellectual property is unique in that it doesn't exist in a physical form, yet it holds significant value. It represents the fruits of human creativity and innovation. There are several types of intellectual property, including copyrights, protects original works of authorship, such as books, music, films, and software. Trademarks, protects symbols, names, and slogans used to identify goods or services. Patents, protects inventions, granting the inventor exclusive rights to the invention for a certain period. Trade secrets, protects business secrets that provide a competitive edge. Royalties, earning from your creations. Royalties are payments made to the owner of a particular IP right, like a copyright or patent, for the use of that IP. For instance, every time a song is played on the radio, streamed online, or used in a commercial, the songwriter earns a royalty. Similarly, authors earn royalties from book sales, and inventors earn royalties when their patented inventions are sold. For example, J.K. Rowling, the author of the Harry Potter series, has earned substantial royalties from the sale of her books, movie adaptations, merchandise, and theme park attractions based on her creations. Patents, protecting and profiting from inventions. A patent is a form of IP that gives the patent holder the exclusive right to make, use, and sell an invention for a set period, typically 20 years from the filing date. In exchange for this exclusivity, the inventor must publicly disclose the details of the invention. Patents can be incredibly valuable. For instance, pharmaceutical companies invest heavily in research and development to create new drugs. Once they discover a new drug, they patent it, ensuring they have the exclusive right to produce and sell it. This exclusivity allows them to recoup their investment and earn profits. The impact of technology on IP. The digital age has brought both opportunities and challenges for IP holders. On one hand, the internet has made it easier to distribute and monetize content. Musicians can release music directly to fans, and authors can self-publish ebooks. On the other hand, piracy and unauthorized use of IP have become rampant, making it crucial for IP holders to be vigilant and proactive in protecting their rights. Royalties and patents offer creators and inventors a way to earn from their intellectual endeavors. By understanding and leveraging IP rights, individuals can protect their creations and ensure they are compensated for their contributions to art, culture, science, and technology. Lending, earning interest from loans. Lending money has been a practice that dates back centuries. It's the act of providing funds to borrowers with the expectation of getting the principal amount back along with an agreed-upon interest. This interest serves as the lender's reward for taking on the risk of lending and foregoing the use of the money during the loan period. Let's explore the world of lending and understand how it can be a lucrative source of income. The basics of lending. At its core, lending is a straightforward concept. A lender provides funds to a borrower, and in return, the borrower agrees to pay back the principal amount along with interest over a specified period. This interest is the cost of borrowing and is how lenders make money. For example, if you lend someone $1,000 at an interest rate of 10% per annum, at the end of the year, you'd expect to receive $1,100 back, $1,000 principal plus $100 interest. Types of lending. Personal loans. These are unsecured loans given to individuals based on their creditworthiness. They can be used for various purposes, such as medical expenses, travel, or debt consolidation. Mortgages. These are loans specifically for purchasing real estate. The property itself serves as collateral, ensuring the lender can recover their funds if the borrower defaults. Business loans, provided to businesses for various purposes, including starting up, expansion, or managing cash flow. Peer-to-peer, P2P, lending, a modern form of lending where individuals can lend to other individuals or businesses through online platforms, bypassing traditional financial institutions. The risks and rewards. Lending money is not without its risks. The primary risk is the borrower defaulting on their loan, meaning they fail to repay the principal and interest as agreed. To mitigate this risk, lenders assess the creditworthiness of borrowers, often using credit scores as a metric. However, with risk comes reward. Interest rates on loans can provide lenders with a steady income stream. Moreover, secured loans, like mortgages, reduce the risk as the lender has a claim to the collateral if the borrower defaults. The impact of technology on lending. Technology has revolutionized the lending industry. Online platforms and algorithms can quickly assess a borrower's creditworthiness, speeding up the loan approval process. Additionally, P2P lending platforms have democratized lending, allowing everyday individuals to become lenders and earn interest. Lending, when done judiciously, can be a significant source of income. By understanding the intricacies of lending and staying informed about market trends and borrower behaviors, lenders can maximize their returns while managing risks. Passive income, the art of earning without active effort. Passive income is often touted as the holy grail of financial freedom. It's the idea of earning money without having to trade your time actively for it. While it might sound too good to be true, many individuals have successfully built streams of passive income that supplement or even replace their active income. Let's explore the concept of passive income and understand its various sources. What is passive income? At its essence, passive income is money earned with little to no effort on the part of the recipient. Unlike active income, where you are paid for the work you do, passive income flows in even when you're not actively involved. It's the dream of earning while you sleep, vacation, or pursue other passions. Popular sources of passive income. Real estate rentals. Owning property and renting it out can provide a steady stream of income. Whether it's residential, commercial, or vacation rentals, real estate can be a lucrative passive income source. Dividend stocks. Some stocks pay dividends to their shareholders. By investing in dividend-paying stocks, you can earn a regular income without selling the stock. Create a blog or YouTube channel. While it requires initial effort, once established, ad revenue and affiliate marketing can generate passive income. Write a book or create music. Royalties from book sales or music streams can provide ongoing income long after the work is done. P2P lending. As discussed in the previous chapter, lending money can earn interest. Platforms like P2P lending sites allow for passive income generation. The initial effort. It's essential to understand that while passive income might not require ongoing effort, it often demands a significant initial investment of time, money, or both. For instance, writing a book or setting up a rental property requires upfront work, but once set up, they can generate income with minimal involvement. The importance of diversification. Just like with any investment, it's crucial to diversify your passive income sources. Relying on a single stream can be risky. For example, if you solely depend on rental income and face prolonged vacancies, your income can take a hit. Diversifying ensures that even if one source underperforms, others can compensate. Passive income offers the allure of financial freedom and the ability to earn without being tied to a job or business. By understanding the various sources and strategically investing time and resources, individuals can build multiple passive income streams and move closer to their financial goals. Networking. Building wealth through relationships. In the world of business and finance, it's often said that it's not what you know, but who you know. While knowledge and skills are undeniably essential, the power of networking and building strong relationships cannot be underestimated. Let's delve into the world of networking and understand how it can be a valuable tool in wealth creation. The essence of networking. Networking is the process of interacting with others to exchange information and develop professional or social contacts. It's about building genuine relationships based on mutual respect, trust, and shared interests. While the immediate benefits of networking might not always be apparent, the long-term rewards can be substantial. Why networking matters. Opportunities. Networking can open doors to job opportunities, business partnerships, and investment deals that you might not have come across otherwise. Knowledge sharing. Interacting with diverse individuals can provide fresh perspectives, insights, and ideas that can be invaluable in decision-making. Mentorship. Building relationships with experienced professionals can lead to mentorship opportunities, guiding you in your career or business journey. Building your personal brand. Networking helps in creating visibility and establishing your reputation in your industry or field. Effective networking strategies. Genuine interest. Approach networking with genuine interest in others, not just what you can gain from them. Active listening. Pay attention to what others are saying, ask questions, and show genuine curiosity. Follow up. After meeting someone, send a follow-up message or email to express gratitude and reinforce the connection. Diversify your network. Engage with people from various backgrounds, industries, and experiences to broaden your horizons. Leverage technology. Use platforms like LinkedIn, Clubhouse, and industry-specific forums to connect with professionals globally. The power of referrals. One of the most potent aspects of networking is the power of referrals. A recommendation from a trusted contact can significantly increase your chances of securing a job, closing a deal, or getting an investment. It's a testament to the trust and credibility you've built within your network. Networking is more than just attending events and collecting business cards. It's about building and nurturing relationships that can lead to mutual growth and success. By understanding the importance of networking and employing effective strategies, individuals can unlock numerous opportunities and pave the way for wealth creation. Financial literacy, the foundation of wealth building. Financial literacy is the ability to understand and effectively use various financial skills, including personal financial management, budgeting, and investing. It's a crucial skill set that can significantly impact an individual's financial well-being and future. In this chapter, we'll delve into the importance of financial literacy and how it serves as the foundation for wealth building. Understanding financial literacy. Financial literacy encompasses a range of skills and knowledge that allows individuals to make informed decisions about their finances. It's not just about saving money or avoiding debt, it's about understanding the broader financial landscape and making decisions that align with one's goals and values. Why financial literacy matters. Empowerment. Being financially literate empowers individuals to take control of their finances, avoid financial pitfalls, and build a secure future. Informed decision-making. With financial literacy, individuals can evaluate various financial opportunities and risks, ensuring they make decisions that are in their best interest. Wealth building. A solid understanding of financial principles is key to building and preserving wealth. It allows individuals to maximize their income, invest wisely, and plan for the future. Avoiding debt. Financial literacy equips individuals with the tools to budget effectively, avoid unnecessary expenses, and manage debt. Key components of financial literacy. Budgeting. Understanding how to allocate income and track expenses to ensure financial stability. Investing. Knowing how to grow wealth by investing in stocks, bonds, real estate, and other opportunities. Taxation. Understanding the tax implications of various financial decisions and how to optimize tax strategies. Retirement planning. Planning for a secure financial future post-retirement. Risk management. Understanding insurance and other tools to mitigate financial risks. Promoting financial literacy. Financial education should start early. Schools, communities, and organizations can play a pivotal role in promoting financial literacy. Workshops, seminars, online courses, and mentorship programs can help individuals of all ages become more financially savvy. Financial literacy is more than just understanding numbers, it's about making informed decisions that pave the way for financial freedom and security. By investing in financial education and continuously updating one's knowledge, individuals can navigate the complex world of finance with confidence and clarity. Entrepreneurship. Turning ideas into wealth. Entrepreneurship is the process of starting and running a business, taking on financial risks in the hope of profit. It is a path many choose in their pursuit of financial independence and wealth creation. In this chapter, we will explore the world of entrepreneurship, its challenges, rewards, and its role in wealth building. Understanding entrepreneurship. Entrepreneurship involves identifying a market need and starting a business to fulfill that need. Entrepreneurs are innovators, risk-takers, and problem-solvers. They are willing to take on the challenges of starting a new venture in exchange for the potential rewards. The rewards of entrepreneurship. Financial independence. Successful entrepreneurship can lead to substantial financial rewards, providing entrepreneurs with independence and security. Control. Entrepreneurs have control over their business decisions, allowing them to shape the company according to their vision. Innovation. Entrepreneurship fosters innovation, encouraging the development of new products, services, and solutions. Job creation. Starting a new business contributes to job creation, playing a vital role in the economy. The challenges of entrepreneurship. Financial risk. Starting a business involves financial risk. There is no guarantee of success, and entrepreneurs must be prepared for the possibility of failure. Uncertainty. The entrepreneurial journey is fraught with uncertainty. Market conditions can change, and unforeseen challenges can arise. Work-life balance. Entrepreneurs often work long hours, especially in the early stages of their business, which can impact work-life balance. Building wealth through entrepreneurship. Entrepreneurship can be a powerful vehicle for wealth creation. By building a successful business, entrepreneurs can generate income, create assets, and increase their net worth. However, it requires dedication, resilience, and a willingness to take risks. Entrepreneurship is not for everyone, but for those who are willing to take on the challenges, it offers a unique path to financial independence and wealth creation. By understanding the rewards, challenges, and the role of entrepreneurship in wealth building, individuals can make informed decisions about whether this path is right for them. The journey to financial empowerment. The path to financial empowerment is a multifaceted journey that requires knowledge, strategy, and action. Throughout this program, we've explored various aspects of business thinking, from understanding the sources of money to the intricacies of entrepreneurship. Each chapter has provided insights and tools to help individuals navigate the complex world of finance and business. Key takeaways. Money is a tool. At its core, money is a tool for exchanging value. Understanding where it comes from and how it flows is crucial for financial success. Diverse sources of income. There are multiple avenues to earn money, from employment to investments. Diversifying income sources can provide stability and growth. The power of networking. Building and nurturing relationships can unlock numerous opportunities, from job offers to business partnerships. Entrepreneurship as a wealth builder. Starting and running a business can be a powerful vehicle for wealth creation, though it comes with its challenges. Financial literacy. Knowledge is power. Being financially literate empowers individuals to make informed decisions, avoid pitfalls, and build wealth. The road ahead. While this program provides a foundation, the journey to financial empowerment is ongoing. The world of finance and business is dynamic, with new opportunities and challenges emerging regularly. Continuous learning, staying updated with industry trends, and adapting to changing circumstances are essential. Financial empowerment is not just about accumulating wealth, it's about achieving freedom, security, and the ability to make choices that align with one's values and aspirations. It's a journey that requires patience, resilience, and a proactive approach. With the right knowledge and mindset, anyone can embark on this journey and achieve their financial goals.